you always used to hear about the Reserve Bank defending the dollar. And basically that used to mean that if the Americans put their rates up, we had to put our rates up. But at the moment, our rates are lower than the US, and I think lower than the UK. We see that the Aussie dollar is down at 64 cents. So is defending the dollar just not a thing anymore? Am I out of touch?
Excuse me. Yeah, look, in terms of the current level, I don't think they're too concerned. I mean, you don't need to defend the currency in a floating exchange rate world, which we're in, because what you're looking for is that exchange rate to respond to fundamentals and to support the economy, whether that means being really high when the economy is inflationary or being really low when it's not. And the Australian dollars proved to be very effective, but in this instance, and it's been the case for a number of years, the Aussie dollar's two main drivers are commodity prices, what we get for our exports, and the interest rate differential to the rest of the world, which is a fundamental for all countries. And they're basically going in exactly the opposite direction. We've got the biggest negative interest rate differential we've ever had to the United States at 140 basis points. And the models tell you that that means the Aussie-US exchange rate should probably be about 50 cents. Right. But on the flip side, commodity prices are very, very high. And the model tells you that the Aussie dollar should probably be at 90 cents or even parity with the US dollar, given where commodity prices are. And of course, the result is we've ended up with something in between. What the RBA is doing, though, is they're leaving us very vulnerable to a downturn in the global economy, the Chinese economy, the demand for commodities, and the price of commodities. If commodity prices fall 30% and our interest rate differential remains where it is, the Aussie dollar will be trading with a 5 in front of it before we can blink. Yeah. And that's what we're starting to see. When the RBA gave up the ghost on another rate hike at the August meeting, the Aussie dollar has basically been falling ever since. It's been very orderly. They only tend to intervene in the market if it's disorderly. And of course, I think there's a scenario that shows global growth falling, our growth being weak, but our currency falling right out of bed, and the RBA is going to have some tough decisions to potentially make. Now, that scenario might not come to pass, but that would be the defend the dollar story, and that would be just as really the fundamental process there is to stop the inflationary impulse that a big fall in the currency could have.